Welcome to the Shepherd's Wallet podcast, financial guidance that speaks pastor. I'm Seth Scott, a financial professional who specializes in clergy taxes and pastor-specific financial strategies. In this episode, I share about yet another tax strategy that tends to fall through the cracks when it comes to pastors. Long story short, if you think that taking a deduction for your unreimbursed ministry expenses is off the table since the Tax Cuts and Jobs Act, you're probably mistaken, at least when it comes to pastors. I'll break down exactly how the deduction works, what expenses qualify, and what you should do before filing your taxes this season. Before I start this episode, I want to point out that I'm doing a free tax webinar on February 17th called Navigating Tax Season Without Losing Your Peace. Go to shepherdswallet.com for registration details. I want to start off by pointing out a few groups that you can join if you're interested in learning more about pastor finances in particular. I, of course, have mine. It's the Sacred Capital Community. It's a free Facebook group, and you can join by going to shepherdswallet.com/join. However, the OG, the GOAT in this space is actually Amy Artiga with the Pastor's Wallet, and she has another community on Facebook. It's also a free community, the Pastor's Wallet community. And it was on this community where we were having a discussion about taking expense reimbursements for ministry expenses for pastors and how that works. And Amy mentioned taking a SECA tax deduction for unreimbursed ministry expenses. Now, I know the underlying law. I had to look it up. The actual ruling is Revenue Ruling 80-110, and it's from 1980. So this has been legitimate IRS policy for 45 years. However, there's a hidden trap when it comes to this particular ruling when it comes to pastors, and I'll get to that in a second. But first, a little bit of background. Quick technical overview. Ministers have a dual tax status. If you've been here for a while, you know exactly what I'm talking about. They're treated as an employee for income tax purposes, but they're treated as self-employed for Social Security and Medicare. So what this means is that pastors pay SECA taxes. It's the Self-Employment Contributions Act, and that's the full 15.3% tax bite that pays into Social Security and Medicare. Whereas most employees pay FICA tax, they're splitting that 15.3% between themselves and their employer. You as a pastor have to pay the whole thing yourself, so lucky you. Here's the trap when it comes to expenses and why it's so easy for tax preparers to miss this nuance when it comes to pastors. And I wanted to talk about this because we're just entering into tax season. I'm recording this in February of 2026. And I want pastors to be educated on questions they can ask their tax preparer, or even questions they can ask themselves, and keep their eyes wide open as they file their own taxes, if that's how you do it. But here's why this falls through the cracks, is because it's baked into the form design itself. So let's think about how this works. So the way self-employment tax normally works is that if you're self-employed, that really means, or typically means, that you run a business. You do freelance work, whatever it is. And what you do is you fill out what's called a Schedule C with that first. Now, Schedule C is the form with your taxes that is essentially a self-employed small business owner form. And the way it works is at the top, you put in your gross income from all of your self-employed activities, and then it prompts you to go through all of your business expenses that you've accrued through doing that work. All those expenses are taken off and are deducted, and you get at the bottom your net income or your net profit from your business activities. Now, that net profit then gets translated to Form SE for self-employment. So this is the form that then calculates your self-employment tax based off of your self-employed activities. All right, so before it ever gets to Schedule SE, where it calculates that 15.3%, it goes through this process first through the Schedule C, where it prompts you to take out all your expenses, and then you only pay self-employment tax on the net profit, minus all the expenses from all of your income from that activity. Now, pastors typically don't fill out a Schedule C. you're an employee, so you get a W-2. You'd only fill out a Schedule C if you get 1099 income. And some pastors do. If you're doing freelance work, weddings, funerals, speaking engagements, those kinds of things, that legitimately is self-employed small business income. And you can file a Schedule C. And if you incur any expenses through doing that sort of work, you can deduct that dollar for dollar against your income for both income and for self-employed tax purposes. And that's fine. So that's built into the forms. That's the way that it goes. But where it falls through the cracks is that most pastors are getting the bulk of their ministry income through their church via a W-2. Except that W-2 income for you is treated as self-employed for Social Security purposes, and it goes directly to Schedule SE. It doesn't go through Schedule C first. So there's no form that's asking you about your ministry expenses. You just have to know as a pastor that you have to manually adjust the number on Schedule SE line 2 and attach an explanation for any unreimbursed ministry expenses and mileage that you've incurred in the normal course of doing your ministry job. Right. So if you truly are self-employed, like a small business owner, you're walked through, hey, how much did you pay for advertising? How much did you incur in mileage? What are your other vehicle expenses, your office expenses, all these sorts of things. You put these in, those get taken off, and then the result at the bottom goes to Schedule SE. As a pastor, your W-2 essentially goes straight to Schedule SE, but you're supposed to know, or your tax preparer is supposed to know, hey, before you put it onto Schedule SE, if you have any out-of-pocket expenses that you've incurred that weren't reimbursed by your church in the actual duties of your job, you can deduct those first before it goes onto Schedule SE. And you have to attach an explanation, so just a known document that you produce that shows all the things that you would put on a Schedule C. You have to provide that document yourself alongside that. So as far as I can tell, ministers are the only class of worker in the entire tax code that have income subject to self-employment tax that doesn't first flow through a Schedule C. Everyone else gets prompted by that Schedule C form, but ministers have to remember to do this adjustment manually. So this is kind of the light that went on when Amy was mentioning that pastors can reduce their self-employment income liability for their unreimbursed expenses. And I'm like, well, yeah, but why is this missed so much for pastors? It's missed because pastors have to remember to do it, or their tax preparers have to remember to do it. They're not being prompted by a form to remember their expenses. So when a CPA or a tax preparer who doesn't specialize in clergy work prepares a minister's return, they're following the form logic. W-2 wages go here, housing allowance goes here, calculate Schedule SE, it's done. There's nothing in the form flow that's going to prompt them or remind them to ask you about your unreimbursed expenses as a minister for self-employment purposes. And the part of the reason why this is even more falling through the cracks is because ever since the Tax Cuts and Jobs Act of 2017, that removed, and then it was codified in the Big Beautiful Bill, unreimbursed expenses for income tax purposes are off the table. So you can no longer reduce your income tax by any unreimbursed ministry expenses that you have. However, that's a completely different provision from what we're talking about here. Revenue Ruling 80-110, that's still in place for self-employed income. And for most pastors, the bulk of their tax liability comes not through their income tax, it comes through their self-employment tax. So this is a really powerful thing to keep in mind if you have not opted out. So if you are paying self-employment tax, you can probably reduce that tax burden by maybe hundreds of dollars every year. So if you want to bring this up to your tax preparer, or if you want to look at the original source on this, you go to the Schedule SC instructions, and buried in there, you'll see a paragraph that reads like this, quote, "If you were a duly ordained minister who was an employee of a church and you must pay self-employment tax, the unreimbursed business expense that you incurred as a church employee are not deductible as an itemized deduction for income tax purposes, right? Okay, so that's the change that Tax Cuts and Jobs Act made and that the big beautiful bill codified forever. Second sentence, however, when figuring self-employment tax, subtract on line 2 the allowable expenses from your self-employed earnings and attach an explanation. So they're making you do this extra work. They're not making it easy for you. However, it is a way that you can possibly save in taxes if you have out-of-pocket expenses or mileage that your church is not reimbursing you for. So this reminder kind of crystallized something for me. The knowledge gap in clergy finances isn't just about individual pastors not knowing things. It's structural. This is another example of how the form design itself works against you as a pastor. Like you have to have read this single sentence in this whole Schedule SC instruction to be reminded that you can manually take out your allowable expenses before you put it on to Schedule SE. And that's, for every $100 in expenses, that saves you over $14 in self-employment tax right off the top, right? So let's talk about what expenses qualify for this. Um, we're talking ministry mileage. This might be a big one. So you can't deduct your commute to and from your church, but you can deduct mileage driving to and from weddings and funerals, hospital visits, that sort of thing. This is 70 cents a mile in 2025, and it goes up to 72 and a half cents per mile in 2026. It's better than a kick in the teeth. Things like continuing education, conferences, workshops, travel expenses for overnight ministry trips, these are all deductible. Professional books, commentaries, subscriptions, denominational dues, credentialing fees, ministry supplies, equipment, these sorts of things. One thing you should keep in mind is that meals, ministry meals, you can deduct 50% of that. So you can't deduct that dollar for dollar. You can only take half of that. So let's do some math with an actual example. So let's say you're able to put together $3,000 in unreimbursed expenses from 2025. This will save you about $424 in self-employment tax. If it's $5,000, that's going to save you closer to $706. So for pastors who are often underpaid to begin with, this can be some real money, and over the years, this can really add up. So again, how this works mechanically. So you would enter in your W-2 income. Normally, you would take box 1 from your W-2 and then plus your housing allowance, because your housing allowance is subject to self-employment tax. So you have to add those together and you have to manually put it onto Schedule SE line 2. But before you put it onto line 2, you subtract the expenses from ministerial income before putting it there. And you also have to create a document and attach an explanation where you kind of give a line item like you would on a Schedule C. You can bring up a Schedule C and kind of see the categories that they're giving you, and you can kind of use that as a template. Now, you wouldn't use a Schedule C. That's only for 1099 income. And if you have 1099 income, then yeah, you can still do that. That's better because that deducts both your income tax and your self-employment tax. So if you do have 1099 income and you have expenses that you've incurred in the course of doing that 1099 work, then that's better. Put that on Schedule C. That's dollar for dollar against both income tax and self-employment tax. So that's better. But if you either have exhausted all of your expenses for 1099 and you still have expenses left over for your church work, or if you don't have 1099 and all you have is your church W-2 like most pastors, then at least you can take a self-employment tax deduction for those unreimbursed expenses. Now, I want to take a little sidebar and talk about um, accountable reimbursement plans. And this is the better way to do it. If your church is willing, then your church can reimburse you directly for those ministry expenses through an accountable reimbursement plan, and they can do it in a way that doesn't add to your tax burden by putting it onto your W-2. Some churches will do that. They'll just say, okay, you incurred $1,000 in expenses, we'll just add $1,000 to your paycheck and we'll call it good. That's not going to work because, again, that $1,000 is subject to both self-employment tax and to income tax. And so you're skimming off the top of that to pay your taxes, and you're not able to actually be reimbursed by that dollar for dollar. If you have an accountable reimbursement plan with your church, then your church can provide that money as a reimbursement to you without it adding to your tax burden. However, if your church is not willing to do that, or whatever, that's where this self-employment tax deduction comes into place. So accountable reimbursement plan is better. Definitely advocate for one with your church if you haven't done that already. If they're not open to that, then at least you can take a self-employment tax deduction for those out-of-pocket expenses. Now, I mentioned again how this sort of illustrates a bigger issue when it comes to specialization in clergy taxes and finances. It's that this is just one example of ways that pastors have fallen through the cracks. I've used that term a lot this episode, but it really is true. And I think the Tax Cuts and Jobs Act is a perfect illustration of why it's true. Um, because legislatures are making policy without ministers in mind, right? They're just thinking about the normal taxpayer. And so they do something like the Tax Cuts and Jobs Act that is a big income tax break for most individuals in the United States, but it doesn't really help pastors that much because pastors don't pay a lot in income tax. They pay more in self-employment tax. And so the self-employment tax has stayed the same. That provision has been the same for decades. And so pastors are paying about the same in taxes as they were before the quote tax break that everybody else got. And so that gap is even wider. And then when it comes to, you can't deduct unreimbursed ministry expenses anymore, that some people will think is like, well, then you can't deduct ministry expenses at all. Well, you still can, because ministers are considered self-employed. So yeah, you can't deduct it from income tax, but you can deduct it from self-employment tax. You see these unintended consequences that tend to happen that just makes pastor finances and taxes just even more niche. It makes it even more complicated, and pastors become this wonky edge case that no one really thinks about how it's going to affect them. And so there's a sort of a delegation trap that happens. Pastors assume their taxes are being handled correctly because their CPA is signing off, or the church treasurer runs payroll and that they must be okay. My W-2 must be correct. But who's actually responsible for knowing these clergy specific rules? Really, if there's an audit, it really falls to you. And that's one of the reasons why I have this podcast, is because I want you to be educated on the things to ask and the thing to have your eyes open to look at ways that you can help ensure that your taxes are being done properly. There's also the systemic knowledge gap, like I was talking about. Even excellent CPAs can miss things like this if they don't specialize, because again, it's knowledge that has to come from themselves. It's not coming from the software. They're not being prompted like they normally are in other situations. It's typically not profitable for general practitioners to learn clergy taxation deeply. They might see 2 to 3 clergy returns out of the 500 that they do every year. Tax software typically can't handle this adjustment. At least it can't handle it well. And even professional software requires manual override. And I know this because I use professional tax software. And, again, things like the extra statement where you have to, upload your expenses. That's not something that's in my software. And my software even has a nice little form that helps you calculate the housing allowance. So it does have some clergy specific stuff built into it. However, this thing, I haven't seen it. If it's in there, then I don't think it's there. I have to do it manually. Um, this isn't taught in seminary, which I think is a travesty. I'm trying to get curriculum into seminaries so that um, prospective ministers can know what they're getting into before they, sign on the dotted line and accept this calling. It really is a calling, but I see too many young ministers that are, have sticker shock when they see their self-employment tax burden after their first year of working. And it's just really sad. No one should be blindsided like that, much less servants of the Lord that are already sacrificing in other ways in order to fulfill the calling that that God has given them. This leads to um, a lot of shame, I've found, when it comes to finances in pastors. When pastors don't understand their own taxes, they feel like they're the problem, like they're stupid, but this isn't about intelligence. It's about access to specialized knowledge. And it's not any individual pastor at all. 90% of pastors report financial stress. That's not an individual failing. That's a systemic issue. And this is just one example of kind of why it's systemic and why it tends to fall through the cracks. The complexity becomes genuinely absurd. And it gets more absurd again with every tax reform that doesn't keep pastors in mind and leads to these weird edge cases, and it just becomes more and more and more. So in general, if you're a pastor and you're listening to this, and I know I can get technical, right? I'm a nerd. I nerd out on this stuff. I do it so that you don't have to. And this is just what I love to do. And I love serving the servants of the Lord. But this can really be overwhelming because this really is like kind of the tip of the iceberg. This is one example of the types of things when it comes to pastor taxes that are just not front and center, front of mind for, CPAs or people doing taxes. And I would just want to tell you, you're not failing, right? This is not a failure on your part. This is just a specialty. And the way that I explain it in the past, it's like all of the financial resources, all the tax resources out there, is like teaching you how to play really good football. But you as a pastor are playing basketball. It's not necessarily a harder game. It's just a game with completely different rules. And so if everybody's training you to play football and then you end up on a basketball court, those skills are not going to translate. And that's not your fault. Anybody in that situation would feel under-equipped. They would feel unprepared. They would feel like they're sticking out like a sore thumb. They would feel like they're failing. And most, probably 90% would just sit on the sidelines in that situation and be like, you know what? I'm just not even going to engage. Like, this is not what I trained for. This is not what I signed up for. And I'm just going to sit this one out. Now, there are a few pastors out there that, in that situation where they find out that they're in a different game altogether, where they're like, okay, let's learn the rules of this new game. Let's figure out, this and that and kind of figure it out as they go. And if you know a pastor like that, they're worth their weight in gold. They're the ones that look at the new kids showing up with, with eyes like saucers, and they're like, hey, kid, come over here. Let me show you how this actually works, and brings people along. And I've met pastors like that who are savvy and who know this stuff, and God bless them. I mean, they're just the best. I'm trying to do this to make more of those kinds of people and make this sort of specialized knowledge more accessible. All right, so brass tacks. What should you do about this year? What should you do about this tax season? If you're filling out your own taxes, this is probably going to require desktop tax software. I'm pretty sure that TurboTax Online and that kind of stuff can't handle making manual changes to self-employment income, right? So you're going to need a desktop software like TurboTax Desktop or something. And again, the reason why software struggles is that the vast majority of self-employed people take expenses on Schedule C, and then that flows into Schedule SE. But because you're special, your W-2 wages go directly to SC, and there's not necessarily a mechanism in a lot of these softwares that allow you to change it without passing through. So there's no natural place in the form flow for the software to prompt you for expenses. So you're going to look for something like a Schedule SC adjustment worksheet. It's usually like line 5C in desktop software. You'll need to attach an explanation statement that can be just like a Word document that breaks out your expenses. I paid this much, I had this much in mileage, I paid this much in office supplies, I paid this much for books, this much for denominational dues, this much for travel, etc. The blog post on my website from last week has step-by-step instructions for this. I recommend you be conservative, only claim clearly ministry-related expenses. I don't like to get too fast and loose with this kind of stuff, and document everything. Mileage, you got to have mileage logs. I like using apps on my phone where you can just turn on and off when you're driving to and from ministry stuff, and then it just prints out a report at the end of the year. There are some free ones. I use TripLog. That's free. There are other good ones as well. And any receipts over $25, just, you should keep that in an envelope or something and put it with your taxes. If you get audited, they're going to want to see actual receipts. If you're working with a tax preparer, here are three qualifying questions that you can ask them. First, is a minister an employee or self-employed for Social Security purposes? And that's the first one right off the bat that just, lets you know if your tax preparer is treating you like everybody else or if they recognize you to be the unicorn that you really are. And also ask them, can ministers still deduct unreimbursed expenses for self-employment purposes? And if they say no, they're probably thinking because of the Tax Cuts and Jobs Act, which applies to 99% of people. If they answer yes, then they're really nuanced and they know what they're doing. And a third one, you can answer this. I'm actually not even sure if this is even in effect anymore since Tax Cuts and Jobs Act. I'm going to do a deep dive on this for um, my next blog article, I believe. But ask about the decent allocation rule. This is really going to show that they know their stuff because the decent rule says that you can only deduct expenses in proportion to the amount of wages based off of your housing allowance. So that's really complicated stuff. But like if you want a bonus question to kind of throw and really make sure that they understand about pastors, anyone who understands about pastor taxes should know what the decent rule is. So you can ask them, are you familiar with the decent allocation rule? And if they are, then you found yourself a good one. If they hesitate on any of these, you may need to find a specialist. Bring them IRS publication 517. That's the where most of the material is on clergy specific taxation, and show them the instructions for Schedule SC. It's explicit. Yeah, it's a sentence buried in the middle of the thing, but it does say if you're a minister, you can deduct for self-employment purposes any unreimbursed expenses. If you've been missing this deduction on your past taxes, you can amend returns for the past 3 years. Depending on your expenses, you might recover, $1,000 to $2,000. I think that's worth the effort. Um, and again, this is only going to matter if you are paying self-employment tax. So if you have opted out of self-employment via Form 4361, I'm sorry to say this episode is not really going to be applicable for you because you don't pay self-employment tax for your ministerial work. This is only for those who have not opted out and who are paying self-employment tax. So here are some bigger questions to ask for next steps. Should your church have an accountable reimbursement plan? I think yes. I think, your church should be reimbursing any ministry expenses that you're incurring as their employee. And, if they do, then you don't have to do any of this at all. Like what you see is what you get on your W-2, and you can just put that directly onto Schedule SC. You won't have to do any work in between. So if you can get your church to set up an accountable reimbursement plan, then you can skip all of this stuff and that's just baked in, which is great. In closing, here's what I want you to take away from this episode. First, if you have unreimbursed ministry expenses, you can likely reduce your self-employment tax as a minister. The blog post on shepherdswallet.com/blog has all the technical details. It cites the IRS publications. It gives you step-by-step instructions. This is all legitimate IRS sanctions, 45-year-old policy. Use it. It's there for you. Second, this isn't about you not knowing enough or missing out on things that you should have known. This is about a system that hasn't built infrastructure for your unique situation. You're not supposed to know Revenue Ruling 80-110. No one even references it anymore because again, it's baked into the Schedule C. There's no reason to really reference it. It's just so a part of the zeitgeist of what tax preparers do for 99% of the people that it's not really common knowledge anymore, even though it's second nature when we think about it. But ministers, again, you guys are a special breed. All right. Your job isn't to know all this kind of stuff, right? So your job is shepherding people, leading your congregation, and proclaiming the gospel. The fact that you also have to become a tax expert just to avoid overpaying is a structural problem. It's not a personal failing. And my personal mission is to try to make it as easy for you as possible to surround yourself with people who know what they're doing and who can actually help you. And that would allow you to focus your time and energy where it matters on shepherding people, on ministry, on your family, these sorts of things. Third, you're not alone in this. There are people like myself, like Amy Artiga at Pastor's Wallet. There's another podcast called the Pastor and Money Podcast, another great podcast with Joy Suzanne Hunt is her name, and she's a financial coach. That's more of an interview format. I find it very useful as well. She interviews ministry leaders and tax professionals, and it tends to be more of a collaborative thing. I have more of a technical approach on mine, but they're both great. It's like any resources that you can find in the clergy specific space, just grab it. Right? There's no competition in this space at all. I'm all about collaboration. I just want as many pastors as possible to get the help that they need. So there's this growing network of specialists who are making sure that pastors get the financial support they deserve. And we're all learning from each other. We're all sharing knowledge, and we're all committed to raising the baseline for all of us. At least that's where I am. And finally, if you're feeling overwhelmed by clergy taxation, completely normal, absolutely normal. Again, this shouldn't be your job. This is, this is placed not by your hand, but in your lap. It's something that John Deloney says on his podcast. If you want someone to review your return and identify opportunities like this, that's what my tax review service does. So $150, a comprehensive review with clergy-specific focus. And if you want to learn how to file your own taxes, I also do tax mastery training, where I'll walk you through step by step how to capture this and other clergy-specific stuff in self-filing software that isn't necessarily built to prompt you on what you should do as a pastor to optimize your situation and to do it compliantly. So that's the tax mastery training. I also do full service tax preparation. I run a boutique practice where I do that for a handful of ministers. You can get access to all of these services at shepherdswallet.com/taxes. And I'm happy to help in any way that I can. If you just want to stay informed, continue following the podcast, follow my blog, shepherdswallet.com/blog. I get way more technical than I do on the podcast. And you can join the Sacred Capital community on Facebook, shepherdswallet.com/join. It's free, and it's a safe place for you to ask questions, right? There are no wrong questions there. This is legitimately complicated stuff, and happy to share knowledge and to meet you specifically where you are. So tax season is starting now. Make sure you're not leaving money on the table, and make sure that you are navigating the system with peace. Thanks for listening. If this was helpful, share it with a pastor friend. I work with denominations and seminaries to provide tax guidance and financial education to pastors directly, so you can focus on your flock, not your finances. If that sounds like something your network needs, have your leaders reach out at shepherdswallet.com. For free resources and community, join us at shepherdswallet.com/join. See you next time.